నమస్కారం. డాక్టర్ బిఆర్ అంబేద్కర్ సార్వత్రిక విశ్వవిద్యాలయ విద్యార్థులకు స్వాగతం.
Hello dear students, this video lesson pertains to the title Income from Salary. This pertains to the BCom final year students of Dr. B.R. Ambedkar Open University. Salary is a periodic payment made by a person called as the employer to a person called as the employee under a contract of employment. It is a periodic payment. The period may be fixed between the employer and employee as per their convenience. However, the criteria is that it has to be in recognition of services rendered by the employee to the employer. The provisions contained under the Income Tax Act for the computation of income from salary are present under section 16 of the Income Tax Act. Section 16 lays down certain rules which have to be followed while computing income from salary. The income from salary is computed under 4 different subheads. The first subhead is called salary. Under salary, there are certain items which appear. The basic items which appear here are 1. The basic pay, 2. Arrears of salary, advance salary, leave encashment, gratuity, death cum retirement gratuity, or any kind of lump sum payment made by the employer to an employee. In addition to this, you also have any interest credited to provident fund or any contribution made by the employer on behalf of the employee to the provident fund. All these will come under the subhead salary. The second subhead is called allowances. Allowances are monetary payments made by the employer to the employee for a particular purpose. Allowances are basically of 3 types. Either they are fully taxable, or they are fully tax free, or they are partly taxable allowances. The third subhead is called as perquisites. Perquisites in short are known as perks. Now, these are non-monetary benefits made by the employer on behalf of the employee. They may be any kind of remuneration or service or any kind of payment made not in cash but in kind. And the fourth subhead is called profits in lieu of salary, that is profits in place of salary. Now, these 4 subheads together are grouped, and the total of these 4 subheads is called gross salary. From the gross salary, under section 16, 3 deductions are allowed. 16(1) standard deduction, 16(2) exempted entertainment allowance, and 16(3) professional tax paid. From the gross salary, when these 3 items are deducted, what you get is called income from salary. So, this is the computation of salary in a nutshell. Now, we will understand each of these subheads in detail. Please recall, the first subhead is called salary. Under salary, the first thing which we had mentioned was basic pay. Basic pay is the starting pay made by the employer to the employee. Now, this basic pay will not change between the year, but it will change from year to year. That is, when the employee enters into service, he is given a minimum starting salary called as the basic salary. Every month he will be paid the same basic salary, but after the end of 1 year of service, he will have an increase in the basic salary known as increment. From the next year onwards, that is from the second year onwards, he will be paid basic salary plus the increment admissible for one completed year of service. Likewise, for every year of service, the basic pay will increase by an amount known as increment. The terms of contract between the employer and the employee will lay down what is the increment that has to be paid by the employer to the employee. The second important thing is arrears of salary. Arrear of salary means salary which is to be paid in the past, but received now. It is called as arrears. Arrears is a payment of a past recognition of service. Arrears of salary is directly calculated and directly credited under the subhead basic salary. Another thing which requires explanation here is the provident fund. Provident fund is a fund created by the employer on behalf of the employee. The employer will credit a part of the salary to this fund called as the provident fund. The employee himself will transfer a part of his salary to the provident fund, and interest on the employers and employees contribution is paid by the fund manager. This interest belongs to the employee. When the provident fund is run by the government, it is known as statutory provident fund. When the fund is recognized by the income tax department, it is called as recognized provident fund. When the fund is run by the State Bank of India, it is called as public provident fund. When the fund is neither recognized by the income tax department nor is started by the government or the SBI, it is known as unrecognized provident fund. So, we have seen that there are four types of provident fund: statutory provident fund, recognized and started by the government; recognized provident fund recognized by the income tax department; public provident fund started by the State Bank of India; and unrecognized provident fund. When the employer contributes to the statutory provident fund, it is fully exempted from tax. When the employee contributes to this provident fund, it is a qualified saving. When interest is paid to this provident fund contribution, it is tax free. Coming to recognized provident fund, when the employer contributes to the recognized provident fund, up to 12% of salary is tax free, remaining is taxable. When the employee contributes to his provident fund, it is a qualified saving. When interest is paid on the contributions made by both, up to 9.5% is tax free, remaining is taxable. Compare this with statutory provident fund, where the contribution is not taxable, it is tax free, while for a recognized provident fund only up to 12% is tax free, remaining is taxable. Interest for a statutory provident fund is completely tax free, while for a recognized provident fund only up to 9.5% is tax free. When the employer contributes to a fund which is called as public provident fund, that is fund started by State Bank of India, the entire amount contributed is tax free. However, minimum amount which has to be contributed is 500, maximum is 1 lakh. Employees contribution is also tax free. Interest also is tax free. When it is contributed to an unrecognized provident fund, the student has to ignore the contribution. Ignoring does not mean it is tax free. Ignoring means for now it is tax free. When any payment is made out of this provident fund, it is fully taxable. This is about the provident fund. Then the next important element of salary is allowances. Allowances, as we told you, are of three types: fully taxable, fully tax free, or partly taxable. When it comes to a fully taxable allowance, no part of it is exempted. The entire amount is directly stated under the subhead allowances. When it is fully tax free, no part of it is taxable. The entire amount is exempted. It will not appear under the subhead allowances. What are fully taxable and what are fully tax free? Fully taxable allowances are dearness allowance, city compensatory allowance, lunch allowance, academic research allowance, marriage allowance. All these allowances are fully taxable allowances. Then what are fully tax free allowances? Allowances are not separately mentioned as fully tax free, but it is only the persons who receive them will make them either taxable or tax free. When allowances are received by the judges of Supreme Court or High Court, they are tax free. When they are received by the diplomats of a foreign consulate staff working in India, it is tax free. Allowances received by MLAs and MPs are tax free. So, students, here the allowances, if they are taxable or tax free, depends on who is receiving them. If they are received by the persons mentioned just now, they become tax free, otherwise they become taxable. So, after you know about taxable and tax free, another important allowance is partly taxable allowance. As the name itself suggests, a partly taxable allowance is that allowance where some part of it is exempted, the other part is taxable. For example, you receive rupees 10,000 under house rent allowance. This is a partly taxable allowance. If it was tax free, the entire 10,000 would not appear. If it is fully taxable, the entire 10,000 would appear under allowances. Because this is partly taxable, what you have to do is you have to calculate the taxable portion in the working note. Find out which amount is taxable. Take only the taxable amount into the statement. Now, as we told you, house rent allowance is partly taxable. So, you should know which part of allowance is taxable and which part is tax free. In order to see which part is taxable, employees are divided into two categories: employees living in metropolitan cities, employees living in other cities. For the employees living in metropolitan cities, in the working note, take the least of these three, that is, number 1, actual allowance received, number 2, rent paid minus 10% of salary, number 3, 50% of salary. Take these three things. Out of these three, whichever is less is exempted, remaining is taxable. For employees living in non-metropolitan cities, A and B will remain the same, that is, actual allowance received, rent paid minus 10% of salary. Only the C bit will change. Instead of 50%, you take 40% of salary. What is the meaning of salary here? Salary means basic pay plus dearness pay plus commission if it is paid as a percentage of turnover achieved by the employee. These three you take 40% of it, and then out of these three, whichever is less is exempted, remaining would be taxable. This is about house rent allowance. The second allowance which has to be studied is hostel allowance. Hostel allowance, as the name suggests, is an allowance paid by the employer to the employee to meet the expenses of hostel met by the employer. Now, where the employee is paid hostel allowance, it is partly taxable. The amount of exemption is 300 rupees per month per child, maximum for 2 children only. If the employee is paid hostel allowance only for one child, it would be 300 per month for one child only. If the employee is paid hostel allowance for 3 children, then out of the actual amount received by him, exempted amount would be 300 into 2 into 12. Even though he has received for 3 children, exemption is given only for 2 children. The other allowance which has to be studied is education allowance. Allowance paid by the employer to the employee to meet the employee's children education expenses. This allowance also is partly taxable, and 100 rupees per month per child, maximum for 2 children is exempted, remaining is taxable. In the same way, conveyance allowance. Conveyance allowance is an allowance paid by the employer to the employee for employees commuting from his workplace to the office. Now, when this allowance is paid to an ordinary person, 800 per month is exempted, but when it is paid to a blind person or orthopedically handicapped person, 1600 per month is exempted, remaining is taxable. Uniform allowance. An allowance paid by the employer to those employees who are working in transport department or postal department, where the employees are required to maintain a uniform. For those persons, uniform allowance is paid. Uniform allowance also is a partly taxable allowance, where the unspent amount is taxable. Unspent amount is the amount received but not spent by the employee. That amount would be taxable. If the employee spends the entire amount, nothing would be taxable here. So, these are the examples of partly taxable allowances. Along with this, there are certain other allowances also, like hill area allowance, border area allowance, high altitude allowances, etc. All these allowances, the exempted amount would be clearly stated under the Income Tax Act. This is under the subhead allowances. The last subhead, as we recall, is profits in lieu of salary, that is profits in the place of salary, where the employer pays the employee any lump sum amount. For example, amount paid under Keyman insurance policy. These amounts, they are not paid on a regular basis. They are paid as a one time payment, or they are paid after the employee ceases to be in the roles of the employer. When this payment is made, it is taxable under the subhead profits in lieu of salary. In lieu of, as we told you, is in place of. A total of these 4 subheads is gross salary. From the gross salary, under section 16, there are 3 deductions. 16(1) is standard deduction. The income tax department has not laid down standard deduction for the current assessment year. So, 16(1) would be nil. 16(2) is exempted entertainment allowance. Now, entertainment allowance is an allowance paid by the employer to the employee to entertain the guests of the business. When such an allowance is paid, it is exempted under section 16(2), and the least of the following 3 is exempted: A, actual amount received; B, 1/5 of basic pay; and C, fixed amount of 5,000 per annum. Out of these 3, whichever is less is shown as exemption under 16(2). 16(3), the last of the exemptions is professional tax paid. When the employer pays the professional tax of the employee, it is taxable under perquisite, but given as a deduction under 16(3) to the employee, where the employer does not pay the tax, it is only given as deduction under section 16(3) in case it is paid by the employee himself. So, from the gross salary, when these three deductions are given, what you get is called income from salary. One important note that has to be taken care of here is exemption under 16(2). When 16(2) exemption is received by a non-government employee, it is fully taxable. If it is received by a government employee, then first write the amount of allowance received under the subhead allowances. Then under 16(2), whichever is less of the three that we have mentioned, that is actual allowance received, 1/5 of basic pay or fixed rupees 5,000, whichever is less is given as 16(2) deduction. For a non-government employee, 16(2) is not available. So, this under section 16, when these deductions are given, what you get is called income from salary. Certain pertinent points that you have to remember are: 1. About the house rent allowance. As we have explained, house rent allowance is an allowance paid by the employer to the employee to meet the expenses of house rent paid by him. Now, here there is a great deal of discrepancy in the sense that when rent paid is given, is it a genuine payment or not a genuine payment? When the employee says that he is paying rent, it is generally considered as a genuine payment until and unless the rent is paid to a near relative or rent is paid by the husband to the wife. These kinds of rents give rise to suspicion with regard to the payment of rent, and when rent paid is 0 or negative, no deduction will be allowed by the employer to the employee. That is, the entire amount of allowance received becomes fully taxable. Another point to be noted here is, in HRA calculations, if any amount is 0 or negative, that is, rent paid minus 10% of salary comes to 0 or rent paid minus 10% of salary comes to a negative figure, no exemption will be given. The entire allowance will be taxable. And in HRA calculation, if the rent paid per month changes, the calculations also have to be made accordingly. So, you will have to consider the change in rent while taking into consideration the exempted allowance for house rent allowance. So, these factors please keep in mind while calculating the income from house property. Thank you.
మా కార్యక్రమాలపై మీ సూచనలు సలహాలు తెలియచేయండి. మీ సూచనలు సలహాలు తెలియచేయవలసిన మా చిరునామా: డైరెక్టర్, ఆడియో విజువల్ ప్రొడక్షన్ అండ్ రీసెర్చ్ సెంటర్, డాక్టర్ బిఆర్ అంబేద్కర్ ఓపెన్ యూనివర్సిటీ, ప్రొఫెసర్ జి రామరెడ్డి మార్గ్, రోడ్ నంబర్ 46, జూబ్లీ హిల్స్, హైదరాబాద్ 500033.